room right now. Takes me back a while. And OIC. Been many a moon, many a moon. We're higher off of weakness in the E-mini. This euphoria that comes out of a potential solution or headlines in the EU solution rallies the market. Then when it's rallied off of a headline, reality sets back in. So the market goes back and forth, and it really does present us with great trading opportunities in both markets. So we should be grateful for that as opposed to the schizophrenia of the market. The EU's governments and central banks, as ours is, are putting all their eggs in the basket of psychological boost, psychological comfort. Well, at least the stock market's up, even though the economy is contracting. So it's being the markets are being manipulated, and we can see it, and we can prosper off of that. It's a great way to spend tax dollars, right? But at least we got a shot at getting some of them back. So we're higher, but we are at resistance. This market has not been able to hold 130.20, and the going has gotten especially rough above 130.28, and the overnight session's high is 130.27. So we're basically going to open up at resistance, and then we got to take it out, or we're going to get some sellers coming into the market. The news this morning is extensive. PPI minus 0.2, core PPI up 0.1. Retail sales up 0.4. Ex-auto up 0.2. Empire Index minus 0.8. It was minus 8 something last month. And then business inventories at plus 0.2. So lots of news this morning. The E-mini's reaction to retail sales is what the market's going to key off of. And some economic news has been coming in higher than forecast. So there's a chance the retail sales news could beat expectations. So for us as traders, we just basically got to get through 130.28 and change that from resistance to support, or we'll be looking at the top of a trading range. Usually when the overnight session has been higher or lower, if you don't get follow through buying or selling, when the day session opens, then the top or bottom edge of the market is in, and we'll pick it up. We'll pick it up off of that. The talk coming out of the EU now, and this solution makes the most sense. There will be a eurozone and a euro currency. Those countries that can meet the budget restrictions and specifications will be in the euro currency. Those that can't won't. But all the tariffs, all the common borders, all the common regulations, DIN numbers, etc., will be kept, and that will expedite trade within the eurozone. But having said that, now think about the currency requirements. I've got liras, and I've got to buy something from the euro currency members, or it becomes pretty tricky. And so devaluation will get the pigs out of their debt problems, but devaluation is also going to significantly increase the cost of the goodies that they buy from the euro currency members, if that's the way it happens to shake out. Easy to make and pass a budget, easy to write a law. There is the law of unintended consequences. Quite often those laws don't do what they were designed to do, and there's just getting the people to do it. And Italy has already broken glass, burned buildings, and burned automobiles. So when the Italians figure out what the new laws are actually going to mean personally, then I'm sure we're going to see more people in the street. So Strong market. We left yesterday wanting to buy 9s to 13s. The overnight session low is 11. You had several hours, including off the London opening, to get long in the 13 or better area, and the market managed to trade up to 27. So pretty damn good trade for those of you who took advantage of it. And for those of you that are Ireland or points farther east, the overnight session markets are a gold mine. They honor support and resistance to the tick. I mean, it's found money. It's like just seeing, a couple $100 bill. Wouldn't that be nice? I have a double Benjamin here, but laying right there on the sidewalk to pick up. It's just there every night. But don't forget about that. Okay, the market is pointed higher. If I were to come in and do an end split, it would be the correct way to do it. That's what it looks like. The breakout point is 1920. So as long as this market stays above 20, we can trade higher. The market has rejected prices below 19. So 15 to 19 is pretty good support, hence our aggressive buy of 17 to 21. If 15, 16 changes from support to resistance, then we'll have a trade setting up later during the day too for us. But you have to be so thankful and so grateful that you are learning how to trade, or you know how to trade, because you can prosper and are in very, very severe bad economic times. You can be right up there with the repo agents and bankruptcy attorneys and inside government officials, and just working it every day, and then taking your proceeds to the market and being able to buy pretty much what you want at discounted prices. Okay, the market is trading higher. Our 19 to 20, you can see that the mean green line is at 20.5. The mode's at 22.5, so this is our first little band of support. And our second little band of support is going to be like 15, 16 down here. So here's one, and there's two. If we've got a lot of strength, if the market is pointed higher, and this 16 to 20 area will hold. That is correct, Bill. Got to get through 28. We do have news on the half hour that we talked about, and the E-minis reaction to the news will give us our first trade setup. So here's resistance, the first one. The second resistance is up here. And we really do have to take this high out and then change that from resistance to support to hold this length in their positions. Great trade, Frank. And Frank must be really pleased with himself in all facets of his life to be able to put a limit buy out there and go to sleep in the overnight session and wake up a happy camper. But that's the way that you do it in the overnight session. You put your limit buy or sell in, you put your protective stop, and you go to bed. And you usually wake up in the morning with a smile on your face. So 28 is key to the top. We got to take it out, and we got to change it from resistance to support. And if we can't, then we got to sell. It'll set up in that 24, 28 area. Well, you're playing for a lot more than 4 ticks in the overnight session, so your protective stop should be outside of the pivot low that gave you your buy or sell, Bill. So go find your pivot high or pivot low, and get your stop at least 2 ticks outside of it, and you're in business. Yeah. How much money have you spent to get as far as you are, Big Frank? Money for nothing, my rear, or your rear. this too, like all other endeavors, does have tuition or learning costs. Now you get that money back, Frank. It will all work out in the end. Okay, I think we need to go back and look at the F1 screen. Excuse me. Let's talk about this a little bit. Money for nothing is what the government sells, Frank. You vote for me and I'll give you this. You bundle $500,000 for me and I'll guarantee $500 million loans. You bundle $1 million for me and I'll guarantee $1 billion loans. Now do the math on that. You talk about a return on investment. And that's the crime that's done. Back in the old days, in the 1870s and thereon, you used to a little muscle from the mob and half pint of whiskey. You could buy your way into office. And now it takes a $40,000 or $50,000 a year job to get you in, keep you in office. But most of these people are unemployable in the productive sector of our economy. I guess you got to do something with them. A lot of money for self-esteem. Okay, the big thing on a bracketed market, and it's very, very difficult to trade, is that the market will take out stops above these highs, and it'll look bright, and it'll open just fine. And then it'll reverse and it'll go back in the trading range. So right here we've got a 25 minus and a 70 plus market. About 50 points. And that's where we are. And if you want to look at your central value, it's probably in this 45 area, right in here. So we got stops below yesterday's lows pretty handily. We've gotten stops below this low. And that opens us up to this 19 to 20 area right down in here. And I don't know if we can get down there or not. But the trick for us is to recognize that it is a trading range and the game is played by exchange members and it's gunning stops. So the way that you ascertain that you're in a trading range is that you have to pose or ask the question of yourself, has anything changed? Why are we so high or why are we so low? What's changed in the news? And it's through that assessment of what's changed in the news that you figure out that it's a trading range or not. And as much as the market likes to react to news and all that good stuff, sometimes it's not easy, but it's not not impossible either. Okay, they got stops above the X period high. We had the opening, we had consolidation. Asia sold a little bit. Selling accelerated in Europe. Europe is worried about, is the problem really solved and what's to come next? Will the euro currency hold together in its present form or not? And it looks like behind the scenes Germany and France are pushing at least for a two-tier. See, we have euro currency twos. Now let's see, how well is Portugal, Spain, Italy, and Greece? How well is that currency going to act as far as you know, a stable currency that you can count on? So difficult situation, solution's not easy. Not going to be done with a flick of a wrist. Signing a piece of paper. Okay, right now you can just see on this screen that we got stops above this high. We got stops below yesterday's lows. We have not gotten stops beneath this low. So there you are at 1232. And I believe that's a legitimate, this 1230, 32 area and then 25 plus or minus are legitimate trading targets. Now we do have news. Retail sales call up 0.4, X Auto up 0.2, Empire Index at minus 0.8. Well, Max, 80% of the time, the higher the low of Globex, when you go back and look at your daily bar chart, the higher low came out of the Globex session. So the overnight session goes and gets stops above the preceding day's high. It's pointed lower, and you can do a P split up there. You can see that it was pointed lower. And then so I got stops above yesterday's highs. Everybody's happy, and you come back in. But the key, Max, is figuring out what has changed in the news. I mean, what does it take for us to trade higher and take out 1270 and keep this move going? Well, better than expected retail sales would be one thing that could do it. More money put up out of Europe to solve the pigs' debt problems. I mean, that's where you have to go in and separate the wheat from the chaff, or figure out what you got. Ugh, Charlie, headache. Ugh, can't think that way. Well, you don't really have to think that way. That's about 15% of the decision. But I mean, yesterday we did a P split. We had it wired. Didn't have any trouble with yesterday making the calls, did we? Move out of the middle in P period. Nothing's really changed. And in fact, the news is pretty bearish if you think about it. This is a house of cards being upheld by central banks, but you're looking at nothing but B's right there. If I fold this in, got a pretty stout B right there. And if I fold this in and do an N split, I'm still looking at B's. So do you have to know a lot more than that, Max? The key to breaking things out is, has the market or the news really changed? And if it hasn't, then you're in a bracket. Okay, structurally, we have yesterday's lows at 44, so getting stops in this area is a possibility. Then we have the 50 area. So the aggressive sells 44, 46. Then 49.51. And that's based on news as expected or worse than expected. So we'll have to see what happens. We're down on the news now. Any questions on my comments on the market? One of the things about trailing stops is that when Bill Thomas was doing a lot of work in the note, he had a trailing stop that guaranteed that after a few ticks he was profitable. But that trailing stop cost him, he left a lot of money on the table with that trailing stop. I mean, he was meeting his business business plan, but it was pretty inefficient from my perspective. It was just what Bill wanted, and it was by design. So a trailing stop is as good and as bad as it can be. It can take away significantly from your bottom line in the normal back and forth. And the beauty about trading the overnight session is you got your damn hand off the mouse, not taking yourself out, cutting your winners short. So the overnight session can really work well if you just take it a little bit more relaxed, a little bit bigger picture, bigger take on the market, and play for 2 to 3 times your normal profits. I get up the next morning, John, or when I've awakened in the night, and go look at the machine and figure out where I want it. And then that's when you can move your stop. Unfortunately, I don't sleep through the night anymore. Okay, we got at least short covering right here on this bar. And here's our 44, 46 area. There's our 49, 51 area. And we'll have to see what the news is going to be. So we got some pretty good short covering. Peak selling was right here on this bar. Market rallied up a little bit. They hit it, couldn't break it. So somewhere in here is our peak selling. And then from here on over, you can see that we've got short covering. And from this point forward, you can see that the number 2 pain is favoring the buyers. So down to the news this morning, and on the note, we're getting profit taking based on people booking profits before the AM news, and the news is out in 3 minutes. So I'll be quiet. We'll see what the news brings. Back in about 2. We've got to see follow through buying, and we're not. PPI was called -0.2, came in -0.3. Core was called up 1/10, came in unchanged, positive for both markets. Retail sales up 0.5, better than the forecast +4. Ex-auto up 0.6, better than the forecast +2. It's a negative for the financials, positive for the stock market. Empire Index came in +0.6% versus -8.4 last month. So you can make the case that business is the economy, while growth is slower than you would normally expect post a recession. We still have slow to moderate growth as per the Fed's forecast. That should hurt the financials. It should rally the E-mini. Now you got to get follow-through buying. If we don't get follow-through buying on the E-mini, that means the note will come up. So we're probably going to get a retest of the E-mini's high and or take it out, and a retest of the note's low and or take it out before this resolves itself. But the news is good for the E-mini, not good for the note. And those that took profits in front of the news feel pretty smart. But you got to get follow-through buying on the E-mini and follow-through selling on the note to stick with the trades or to change the dynamics. I'm going to go grab a bite to eat. Back in a few.